Welcome to Stock Charts Trading. Today we're going to be looking at buying stocks. And again, you have to have somewhere where you can get a good quality fundamental analysis of the stock that you're buying. You want the absolute best stocks so that you can make the best returns on the money that you're buying on. You're basically taking your money. So where do you want to put your money? High quality stocks or iffy stocks? High quality stocks should produce you the right yields with the right trading plan. So we're on Zacks, and today it's just the home page, and we've pulled up this ASX, and we can see that ASX has a volume of almost 1 million, and it is a strong Zacks buy. We can see that the value is an A, the growth is an A, the momentum is a B, which gives it a BGM of A. Right now, you can see that the stock is going up a little bit here on the bottom chart. It's gone from these lows of $3 all the way up to about $4.50, making higher highs, higher lows. Right now, we have a higher low. We have an equal high right here, right around $4.50. And so we kind of are in a sideways consolidation coming off of the bottom. Let's take a look at the charts. I have one other chart that we're going to be looking at, and it's right here with DLNG. We're going to be taking a look at that one also. Came up on the Zacks standard. It's a high quality stock, and so we're going to take a look at that one too. Ticker symbol ASX. We can see that we're on a 20-year chart, and I've done it 4 days because I kind of wanted the boldness of the candlesticks to show out. We can see that we have a low right here of about $1.35. We have a high of $8, and we've just been in this sideways channel, kind of bouncing back and forth off of these highs and these lows. We can see right now we're in the middle of this thing trading at $4.50, and so our high is around $8.12, which only gives us about 75% profit on this investment. Now, we know if we were to take from the lows all the way up to the highs, giving us a range box and duplicating that upward, then we would get a higher target, which would probably give us somewhere around the neighborhood of $6 plus 8, gives us around $14. And so if we were to get into that trade right here at $4.65, because it's close to 50% off, it's been 50% off a bunch of times, but right here, we're probably 44% off right now. And then that gives you the ability to save your pullback, right? So what happens if this thing comes down back into here, back to the $1 to $2 range? Well, then once it breaks out of this channel right here at $4 or $3.50, you can add to your position getting in, because remember, your first trade is 50% off of the highs. We're pretty close to that at 44. Your second trade is once you break through the diagonal resistance, which is a downtrend, right? So once you break the downtrend channel, you can get in one more time. It gives you basically 2 trades that you can place onto this with a target of about $14. Now let's look over at DLNG. DLNG, you can see that our trade volume was a little bit lighter on this one, and it's somewhere between the 500 to about 1 million trading positions. This stock's about 6 years old, and you can see that it has a high around the $25 mark, and it has a low around $1 mark. We can see that we have a huge downtrend on this stock, and so let's take a look a little bit closer and see what is going on. Okay, we have a high, we have a lower low, then we have a lower high, a lower low off of these lows. We have a lower high here. Now we flatten out and we have an equal high, and then we have this lower high right here, which is lower than this high right here. All right, off of these lows over to these equal lows, which are a little bit lower, and that's okay because it's still in the variance. It's in the zone of what happened. And then what happened right here, right? You have these huge candlesticks bouncing up, and now you have a higher low. That low is higher than this low. And then here we have a higher high, right? Because you have a high here, a lower high here, and now you have this breakout. And it's even broke above our highs from from over here. So you have the top of the candlestick. We're going to just take this over and boom, what do you have? You have a breakout right now. So this is going from downtrend and it's trying to make a new uptrend. And so what do we see? When this completes, it will be a higher high. And then what should we expect? We should expect a pullback. Where it's going to pull back, we'll get a higher low. And then after that, what's going to happen is we're going to get another higher high and we're going to start racing towards our resistance at the top of the highest high. Because what does stock want to do? It wants to go back to the highs and create even more highs. Buy low, sell high. That's what we're doing here. We're buying low and we're going to sell it high at the target. So for you to buy DLNG right here at a 240, and then you would have your first target at this support resistance level of around $6, it gives you 150% profit. Take off a third of your shares and then ride up for your next target back to these highs of $25. That would be 1,000% profit. If you wanted something that was really, really long term, you could use these targets of $50, which would give you 2,000% profit. And this is a multi-year trade. It's not a 1 month, 1 week, 1 year even. No, it's going to be something that would be a 10, 20-year trade. You set it, you forget it. You walk away. You invest $50, $100, $25, whatever you have on that weekly ratio that you've divided up, and you make this trade, you set your targets, and then you look for the next one. Zacks produces these kind of great companies at low rates every day.